Good morning, traders. Today is Monday, the 16th of August. My name is Neville Hornsey, market analyst for YouTrading, and today I am joined by
Joel Frank, also market analyst for YouTrading.
How are you doing? You looking well?
Yeah, I'm good, man. We were just saying, we both had good weekends because we were both returned to like events for the first time in 2 years. I was at a wedding, which was nice, very nice. Seeing a lot of happy people without masks and
yeah, exactly. And I danced till 2 a.m. in a pub in East London, so it was good, like the good old days.
Yeah. Just need to test ourselves for COVID in the middle of the week, I think, just in case. But
just in case.
Worth it.
Yeah, for that one night of freedom.
Exactly. It's been a long time coming.
Yeah, freedom. How are you seeing the markets? You know, post Taliban taking over Kabul and Chinese data, and the China trying to get in bed with the Taliban a little bit. So, yeah,
I mean, I'm not really sure how the whole sort of geopolitical situation there is going to shake out, because the Taliban, they're a wild card, aren't they? Like they're crazy. They're just insurgent, like crazy people. So I mean, if China are going to try and befriend them, because maybe China see it as the enemy of my enemy is my friend, because obviously they're against the US. But don't know. I mean, as far as markets are concerned, we did have a bit of a risk-off Asia-Pacific session. China data, because it was weak industrial production, weak retail sales, weak investment numbers for July. That was probably the main factor. But yeah, I mean, all this stuff with Afghanistan is definitely adding to the uncertainty, because like Afghanistan is a big country. It's next to Pakistan and India. Like, yeah, it's not good news.
It's weird how the news sometimes maps onto the economics, and sometimes the economics actually forms the news. And maybe, that's all good. Talking about that, last week, European data came out, good trade balance for Europe. Personally, I felt like the European data was good, but the traders used that news as a way of getting the last few retail buyers in so they could do a reversal. And any thoughts on Europe?
On euro sterling?
Just euro, anything.
Or just Europe in general? Yeah, I mean, what's going to drive the euro in the next? Obviously, we've got PMIs on Friday out of the Eurozone and the UK, so that could be another set of interesting economic data. There's not really much else out of Europe this week, to be honest. Like euro has been more trading off of global themes recently, like the US dollar. That's probably going to be the case for most of the week. For this pair, we do have some interesting data points out of the UK this week. I think we've got data coming out on Tuesday, Wednesday, Thursday, and Friday. It's like retail sales, inflation. What's the other one? Jobs data. And then PMIs, So I think the driver for euro sterling this week will be the sterling side.
Okay, but if FOMC that's just the meeting minutes, but like in terms of, that's probably a focal point for the US dollar, isn't it? Like it probably won't do anything until then, and obviously the Dixie and the Euro USD is quite correlated, with 60% of the dollar index euro. But
yeah. I mean, I think that there is actually, so FOMC minutes on Tuesday and those, on Wednesday, and those should be the most important event of the week, really, for FX markets. But you've also got Powell speaking on Tuesday, the day before. So, and actually you've got retail sales data as well. Although I think the comments from Powell are going to be the most interesting, because in the last couple of weeks, we've had all these FOMC members talking about what they think the timeline for QE tapering should be.
Do you think the Fed FOMC meeting, I was going to ask you, like the FOMC meeting members that have been talking recently, do you think they've shortened the timeline now? Like, do you think they're trying to prep us all for a speedier rate hike or a coming tapering?
I think it's probably a bit too soon to say about a rate hike, because we're going to have to see. I think the main thing for the rate hike is going to be how high inflation is in 2022. But yeah, in terms of tapering, definitely they've been more hawkish over the last 3 weeks than I think markets were expecting like a month ago.
Yeah.
So I think a lot of people I see now are expecting a taper announcement in the September meeting.
Yeah.
And Powell could hint at that maybe on Tuesday, but probably if he is going to hint at it, it'll be at Jackson Hole, which is 26th, 27th, 28th.
A couple of weeks time.
August. Yeah, a couple of weeks.
All right, cool. Okay, so talked about the euro, talked about dollar, New Zealand, RBNZ. Kiwis going sideways. It's desperate to find out what they want to do. It's just like, please tell us which way we're going to go, because it's just going sideways. So
yeah, I mean, it's just like a battle between obviously you've had a lot of downside in the Aussie, which has been weighing on the Kiwi. The dollar's been mixed recently, but like the dollar's generally been doing well in the last sort of 6 weeks, which has been weighing on the Kiwi. But then you've got these hawkish vibes coming from the RBNZ, and they're going to hike this week, it looks like. 25 basis points. And then it's just, I think the main thing for NZD, like markets are expecting the hike, but it's going to be the guidance for future rate hikes. So if that's really hawkish, then NZD should push higher.
Yeah, and I guess if the Kiwi and the Fed both are hawkish, then it just cancels each other out again on the NZDUSD, doesn't it? So maybe sideways forever. Sideways forever. Yeah,
maybe. I mean, we've got quite a good range here, really, haven't we? It's like 0.69 to 0.71 is pretty much the zone.
Yeah, it is. But like you said, Aussie, I mean, they're like keeping, they said they're going to keep to their schedule. So September, then November, like tightening their asset purchases. So maybe sideways for Aussie as well, rather than like a massive drop.
I think markets are a little bit more skeptical that the RBA may be getting it wrong. You know what I mean? Like the RBA might be saying, oh, we're going to stick to the schedule, but markets are thinking, but hang on a minute, if you're in massive lockdowns,
and they keep rolling as well. They keep rolling. Didn't Melbourne or Sydney just roll on for another 2 weeks?
Yeah. And they're still, the cases are still rising. Not that rapidly, but it's still crawling higher. So it's like, when's all this lockdown stuff going to end in Australia? We don't know. No. So the longer it goes on, the RBA may have to just like change position recently, to be honest, to something more dovish.
And Japan, dollar down, yen higher. Is that a dollar move, or do you think that's a risk off move, like people moving into the yen?
I mean, the thing with dollar yen is it kind of, I think the biggest driver for dollar yen is what happens with rate differentials. So pretty much like the Japanese 10-year doesn't really move because it's like locked in place by the BOJ. So you pretty much just got to watch what's happening with the US 10-year yield. And yields have been falling quite a lot in the last like 2 days. First you had the weak consumer confidence data on Friday. Now you've had this weak China data. US yield's quite sensitive to China. Obviously, it's second most important economy in the world. So I mean, it's weird. Like yields, you know, they have been moving lower because of Delta variant fears and concerns about economic growth globally. But if the FOMC is hawkish this week, then potentially we could see yields move higher a bit, and that could support.
See dollar yen then go higher, because for the most part of the last couple of years, this has been like you said, going in lockstep with the 10-year yields. So it'd be interesting to see if we do get a hawkish Fed, FOMC meeting minutes and all that, and see the yields rise, because then this dollar yen is obviously at like a little balance area now where there's like a base ready to go higher, and then there's loads of stops up here at 110.70 ready to go, and then obviously that's within touching distance of the swing high and new highs for 2021. So it'd be good to see if that all plays out, or whether we drop down and go and test this low here. But I personally think the way those Fed members were talking, it sounds more hawkish. I think, like you say, the Fed's going to be a little bit more hawkish, and I think yield's going to go a bit higher, and this dollar yen's going to test up here.
Yeah.
But we have to wait and see. There's no point guessing sometimes. We'll just see what they actually do. All right, so dollar CAD on the oil, back of oil. Obviously, oil came down today, but Dollar CAD's slightly higher, but hasn't reversed since oil bounced. So that's positive dollar again. And gold, this time last week, we were wondering if the gold market was going to collapse.
Yeah, no, I mean, I think we've had this bit of dollar weakness in the last couple of days. I mean, obviously dollar's stabilized this morning, but that's sort of come just at the right time for gold to sort of save it before it really started losing ground. But yeah, the thing is, like we were just saying for dollar yen and all these other assets, if we do get a positive dollar reaction to the FOMC minutes this week, or to the speech from Powell, or to strong US data, potentially retail sales on Tuesday, then gold is going to be the main victim, or one of the main victims. So that's something to look out for gold. Yeah,
definitely. Obviously, I'm just looking at, what might be, this little balance area here, which, acted as support and then broke down. It's starting to act as resistance now. And I just put the fib on it. It's like 61.8%. So maybe we just get held here for a couple of days rather than anything else.
That would make sense. And then the big moves could come later in the week, potentially.
Yeah. So if gold was to go up and test this double top, that would be weaker dollar. Yeah, that would be a more dovish Fed then, I guess, if gold was to go up there.
If the Fed's more dovish, if the US data is bad, if bond yields continue to move lower in the US, then you'd see gold move there, I think.
And then the opposite would be targeting that low and then this double bottom. Yeah. All right. So that's, obviously we're well and truly balanced then at the moment. Literally everything is going sideways until we get some actual news. But apart from the equities, they have been grinding the last week, haven't they? So that's still positive. Anything else you want to talk about?
I think we've covered everything, to be honest, with regards to like the week ahead. Yeah.
All right, cool. All right, well, I hope you have a great week and you don't get COVID.
You as well, Nev.
All right, take care and I'll speak to you soon.